down the hammer and pick up the pencil. You're about to listen to the Savvy Radio Show. Learn from real-life real estate investors, experience revealed with the Savvy Landlord as your host.
Oh, shucks, ladies and gentlemen around the world, you tuned in to the best time of your life. You know why? Because I don't do interviews anymore. I don't know why I don't do interviews. Maybe it's because I'm busy, lazy, or I haven't found the right person to interview. How about that? But I actually did a couple of months ago. I did some research about the listenership of the Savvy Radio Show. That's what you tuned into. And I did get feedback that they don't listen anymore because I didn't have interviews. And I was like, that's interesting feedback, you know, and I don't get any other feedback. I literally polled about 15 people I kind of liked, didn't necessarily liked, and emailed people because I was really thinking about shutting the show down because it's labor intensive. Where is this going? I get some responses. Some people text me. Some people reach out. Some people help me, whatever. I'm not looking for help, but I'm like, is this even really working? I know how many people download this, but you know, it's a lot of work. And then it's extremely lot of work to orchestrate my schedule, which is who knows if I got to do something with some tenant somewhere or the interviewee. And so I am honored to introduce a really good friend of mine. And so it's so powerful, this individual, that it was one of my very first people that I actually hired. One of my weirdest dreams was to have a full-time accountant / financial department, bookkeeping, organizational machine. And a good friend of mine turned me on to this person, and I was like, wow. And this individual that I'm about to interview would drive up to the office, and it was a most amazing experience. And I had to buy her a laptop, and she would operate my QuickBooks. And do we really need QuickBooks? If you're going to be an entrepreneur or if you're going to have financial statements, you probably need QuickBooks. Maybe we can talk about that. And then one day she had to leave, and she was smart, and she, you know, was entrepreneurial and wanted to go work for a accounting firm. And she, I would say, blew up that accounting firm and has done great service. But it broke my heart that she left, and I was so rebellious when she left. I was frustrated. I was like, forget this person. And here I am interviewing her because she's so good at what she does. She loves everything about entrepreneur. And I'm telling you, she loves real estate. And when you meet someone that has the same passion for what you're doing, it just makes life easier. It's just an easy thing to hire someone to you know, work with you. And so, long story short, I have so much more to talk about, and we're going to go into a bunch of episodes. And so, Miss Rose Taylor, hello, say hi.
Hello, hi.
I know.
Thanks for that nice introduction.
I'm like, I had this longer introduction, how I got to accounting, how many accountants that I have, how did I find this person? And it was just, the cool thing is that it's just, things just work out. When you find, I don't know about you, but I've just been through about 3 contractors in my life. I mean, I had to fire some contractors. They disappeared. You know, I've known you for, it seems like a short amount of time. Seems like, you know, how many years? 4 or 5?
5 or 6.
Oh, it had to be at least 5 or 6 years.
Mm-hmm.
I don't have a contractor that's been working for me for that long. And, you know, what does that mean? That means that this is the most critical part of your business. And so Rose and I have been hanging out for a long time, for 6 years. And I've beat her up a little bit about, no, you can't do that. And she was the only person that ever replied back and said, you know, I thought about it, and there may be a way to make that work. And I've never met an accounting person that is into being better. You know, I know you have to comply, but this individual that's sitting in front of me is an enrolled agent. And let me tell you some power about the enrolled agent. So a lot of people may know about my mom, but my mom actually worked for the IRS. And my mom was the gal that was chasing deadbeat entrepreneurs like me running around that have these, you know, my mom would always be on my back about my taxes. I've been an entrepreneur all of my life. And she's like, Stephen, I go after people like you. Entrepreneurs are a negative word in the IRS community. And I'm just assuming that because they're not, entrepreneurs are out making money. They're not back in the room counting the beans, right? That's what they're good at. And so, that's the last thing I want to do is, did I do this 1040 right? Or what's a K1? I mean, I've been doing real estate investing for about 20 years now. I'm just now, maybe 3 or 4 years ago, realizing what a K1 was.
Right.
And you educated me real fast on an LLC that I was trying to do my taxes, and you're like, Rose, what's going on, girl? You're like, hey, man, I'm waiting on your K1. I'm like, what's a K1? I'm waiting on that LLC that you partnered with on somebody. And I was
remember
like,
that.
Yeah. And of course, your woman card just went up in my world. But my mom said, listen, get your taxes done and find an enrolled agent. This is California. My mom's in California. I'm in Oklahoma. And I never, at that time when she would push me to find an enrolled agent, there was only 1 or 2 in Tulsa.
Yeah.
At the time. And this gal that's in front of me, she took the class, took the test, and she is an esteemed enrolled agent. So a lot of people don't know what that means because I saw your business card and it said comma EN.
EA.
EA.
Yeah.
See, I don't
enrolled agent.
I don't do the details. Tell these people what the hell an enrolled agent is.
Well, enrolled agent means that I'm federally authorized by the U.S. Department of Treasury to represent taxpayers at all levels of the IRS. So if that's appeals, that's court,
so if I get sued
or audited,
I mean,
yeah, and we want
that's the same thing
that.
to my mind.
Basically, every function that a CPA can do. I have to do continuing education every year. The biggest difference between like the continuing education with an EA and a CPA is that our continuing education has to be 100% on tax.
Cool.
So in a CPA, they could do it on, I don't know, like a computer software or something like that.
Okay.
So, and I'm not like throwing shade at all to CPAs. It's just,
no,
there's a lot of like, when I tell people I'm an enrolled agent, I'm always like, I always get the response, well, what's that?
Yeah. So basically you're like, it's like an RN, but it's real specific and it's basically on taxes.
Yeah.
And I think that's the biggest need that we have. And it baffles me that we don't know a lot about taxes.
Yeah.
And that's one of the reasons why I've asked you to come up here on the radio show is that, guys, ladies and gentlemen, we are going to talk about taxes. I know it's not a sexy subject, but it's a subject that it's burning in my heart. A lot of people are paying more taxes than they necessarily need to. And we're not about cutting out the IRS. We're about paying what's due. But there's just a gentleman that I had a conversation with today. And this is what leads into my first question with you, Rose. And why do people think, I think, why do people need accountants in general? And I'm talking from a whole reasons why, and you're going to, define those for me here, define it for us. But I was talking to this dude, he wants to get in real estate. He's a W-2 employee and he's a single guy, 27 years old. Right. He works for the government actually in a high level position. He's a very smart, smart dude, whatever, and an intellectual gay. And he makes a ton of money and he's throwing away 40% of it. And I was like, bro, if you just bought an asset or started a business, probably start a business and or bought a rental property, you would get money back because this cell phone that's in your pocket, you are paying that after tax dollars. The cell phone that I'm showing you is after tax dollars. The government realizes that I need this tool to function as a business owner, and I'm allowed to take that off taxes. Yeah. A lot of people don't know that. So what's the need? What do you think? How can you help an entrepreneur? Like they think they're expensive. They think that bookkeepers are expensive, or they think accountants are expensive. Right. What's your take on that?
Well, I think that, an accountant is important for tax planning and strategically tax planning. The IRS code is black and white, but there's also a lot of gray in there. And I think that's what a good accountant does, is helps work with what you have going on and how we can minimize your tax liability. So like back to your point of saying, aside like a small business, that's probably one of the biggest strategies that a CPA can recommend is that, okay, well, do you have any hobbies maybe? Or something that you could turn into a small business? So we can take some deductions that you normally wouldn't be able to do, like your cell phone or your home office or mileage, stuff like that.
Sure.
So,
all right. Okay. That's pretty simple. You got me excited when you said another reason to hire an accountant per se, or a company or firm or an individual is tax strategy. I've been in this business for almost 20 years. We're going on 20 years. And I never sat down until I met your guys' company, where I sat down and actually had a strategic plan. And I know that's coming up. I know you guys like to do it in August. And, September, now I'm like, October, man, I got 2 months to make financial decisions that can affect my taxes. And I think that's a lot of problems that we have as entrepreneurs in general and real estate investors. Can you give us some planning tips or some ideas or conversations that you've learned through these meetings that we can get some tips for us?
Well, the good thing with like having a bookkeeper on a monthly basis is that they're looking into your business on an ongoing basis, so they can see where you're at, financially. And if we need to do something mid-year, we can do that, as opposed to January or April when you're actually filing your taxes, realizing that you have this large tax liability that you weren't prepared for.
So give me an example, like if I bought a property and I need to depreciate it a little bit more, or maybe I can't depreciate
like
something or accelerate it.
Your business is performing better than you thought on paper, and we need to
divert some cash flow.
Yeah, or we
to
need to
enterprise,
or we need to increase your salary a little bit. Just
okay,
things like that.
That's a great point. I think I never thought that way. I know that my philosophy, and I learned this from you about the Obamacare, where you have to make a certain amount of money to qualify for a deduction or the discount. And if I remember correctly, it was roughly around $77,000. 70.
Yeah, I think it's changed a little bit this year. It's increased. Some,
yeah, but if it had a pipeline and it was in the end of December, and usually banks unload property, people tend to be a lot more motivated in December, and you do a transaction that could really hurt your tax liability.
Yeah.
Or affect, and it did. That one year I was really pissed at you, not pissed at you, but remember what happened. Here's a scenario that happened to me. I made less than $77,000 and I sold a business, and in that $77,000, I was ducking under Obamacare, because if you make a certain, I was only paying like $400 in insurance or some number, but this is just kind of rough numbers, folks. And I was short $600 a month. And I remember that I had to go back because I'd sold this one business. I had to go back and pay more Obamacare.
Yeah. But the great thing about being self-employed is that your health insurance is a deduction. So even though you had to pay that in that 1 year, in the following year, we took it as a deduction.
And that's when I called you up and said, hey, can I take this cash out? And you said, yes, I can, because I pushed the loss over.
You had enough equity.
Or credit equity. All right, cool. So let's talk about the different types of, this might be someone's first time as a real estate investor or a business owner or a CBD guy, because that's how my homeboy is trying to do CBD. And so we just throw that out there. There's so many different tax laws and different types of accountants that do, like you said, a enrolled agent is all about taxes, right? So give us some of I see you have notes there. So take your little piece of your little accounting person.
I mean, we kind of touched on the CPA and EA, then you have your bookkeeper.
And what's the difference in pricing? Like, when I try to help friends of mine, I can't afford it. And I'm like, I get it, because I've been there. And I'm like, what do you mean you can't afford $200 a month? Or is it,
Right. Well, I mean,
what's a typical, is it by unit? So I've heard some people talk about they have 10 properties. Is it by transaction? Is it by units?
By volume. Like, okay, if you have a lot of bank accounts, that's more reconciling, or you use a lot of credit cards, that's more reconciling, some more transactions. No, I mean, I don't do it by units, but just Just volume.
So would it be also by the volume of income? Like, so if this individual makes 300,000, it doesn't matter. It's more like my situation. I'm extremely complicated because I have random entities, random credit cards.
Yeah. And there's sometimes there's, transfers from this entity to another entity.
Yeah. That's called Liz. She likes to do that.
So, and that's just, keeping up with it.
And we do that for a specific reason so we can track it better.
Right.
Just so you know.
Yeah.
It's not because we want to make your life a little bit not fun.
No.
But personally, and I think it's worth it because I know I used to be, when I was first shopping for a bookkeeper or accountant, the question that I always got, how many transactions do you do? And I always wondered, like, what does that mean? Until I met you guys, it's like, how many bank accounts do we need to reconcile? And I think they're both important questions.
Right.
But it's just a timetable.
But sometimes you have bank accounts that you only have one transaction go through their month, and that's you're collecting interest or something,
Right. Or they're holding pattern for taxes. Okay.
But, I've seen bookkeepers charge by the hour. And, a lot of times, like me, for example, I'm a bookkeeper and an EA. So I kind of do both. And a lot of CPAs are that way too. But there's some people that are just specifically bookkeepers, and they may charge by the hour or
okay.
I'm not sure, but...
So let's talk about bookkeeper stuff. I have, we're only got about 5 more minutes. We've already talked 15 minutes because millennials can't focus more than, a certain amount of time. No. All right. 2 quick questions. Chart of accounts. I remember starting out that I can go buy QuickBooks, and I did. And I can do this myself.
Yeah.
And I did. I had it all wrong because I didn't know what this thing was, chart of accounts. Explain chart of accounts, the process and the purpose of it, and how critical it is for their business. And I can give you an example how I failed. Or you want me to give you how I failed first?
Yeah, tell me how you failed.
So I misclassified something.
Oh.
See?
Well, that's where I see a lot of bookkeepers go wrong.
Okay, so let's go into the chart of accounts. Someone they're brand new. Yeah. They got their first crib. They don't even know what a chart of account is. Because they've been a W-2 their whole life. It's
just your all your categories. To put it simply, it's your categories of your income and expenses.
Okay, that's a cheeseball answer.
Well, it's simple.
No, listen. But isn't there a specific chart of accounts for real estate?
Yeah.
Oh, okay. Now we're getting now get a little bit more intimate about the chart of accounts. You can't just. It's just like I learned this the other day at WizKids. They're like, "Do you know what the guiding word is in a dictionary?" I'm like, "What the f is a guiding word?" Well, the guiding word is the 2 words that are up there that are on the bottom of the page. So for alphabetical order, so if you open up a dictionary, you have like fire, F-I-R-E, and then on the other side, it's like another word that it's an alphabetical, so you could just look at the 2 top guiding words. I know, I raised my hand at WizKids. I'm the tutor. I'm like, what's a guiding word in a dictionary? Well, those 2, so chart of accounts in my world is a guiding of where these expenses are going. Yeah. And here's the thing. I think that I should be an accountant because I'm like, damn, I know what's going on. But I don't know what they are. Right. Because I've seen very robust accounting before in an apartment building. Yeah. Would they have a chart of accounts that was pages and pages and pages? And so give us a tip on chart of accounts. Like, I know when you click a button, it makes one for you. Yeah. But like, what are those bookkeepers missing for entrepreneurs and or real estate investors? And I know there are 2 different classes and 2 different charts.
Well, I think it comes down to how is that going to help you run your business? Like, if you want to have a chart of accounts that's 5 pages long, sure. I mean, but is that really going to help you? Like, you want to break down every single type of rent income? I don't know. I mean,
well, like I saw a chart of accounts was specific for that per entity.
Yeah.
Like, I don't know if it was just trying to organize it. I mean, the chart of accounts is what we're talking about. That's like office supplies.
Supplies. Okay. Rent expense. You could break down your income portion into rent income. Okay. Pet fee income, late fee income. That's just up to you
to track
if you want to. Is that going to, but for me, like preparing your taxes, I'm going to roll that all into rent income.
Okay. So basically what you're saying, I'm going to translate it in the human being layman words. You can, it's in my mentor, it's like, so you can actually see what's really going on and being more thorough.
Yeah.
And okay, I had a thought to say and I forgot it, but all right. So give us some chart of accounts that you think that you've seen some people's accounting that wasn't accurate? Like they missed a chart of accounts, or is there a surefire one or two that, man, you got to have this one?
Well, one I see often is like putting the whole mortgage payment in as like an expense.
and not breaking it out to interest.
Breaking it out as interest and principal. And I think,
did you see that on mine?
Well, not the ones I do. No, that sounds bad. No, I'm just saying, like,
no, but we actually went back to building them.
Right.
Have you seen that we've done that?
Yeah.
We went back.
But I get it from your standpoint. Yeah, you want to see principal and interest because you want to know what your cash flow is.
Right.
For book basis and tax basis, that's not a deduction. So we don't deduct the principal portion, but it reduces your liability. So that goes on the balance sheet.
Equity.
Yeah.
Or increases your equity. Yeah. Okay. Interesting. So a chart of accounts, anything else on that? Like, it's just do the automatic one, maybe Google up real estate chart of accounts. A lot of
times when you have an accounting software out of the box, like you select what your industry is, and they'll give you a canned chart of accounts. Like if you're doing construction, it's going to be like materials and labor and stuff like that. But a lot of times, I create them just based on
who they are, and you can add them on there.
Right. What the owner, the entrepreneur wants to see.
Okay. And manufacturing would have a totally different.
Yeah, manufacturing and like you had mentioned earlier about CBD and cannabis, that's one that has a completely different chart of accounts just because they have a lot of inventory.
Right. Can they depreciate this? I mean, does it ran like, because I don't know anything about the CBD deal, but I know that it's a federal weird situation because is the accounting process or the same as normal as a traditional as a business, or is their accounting totally different? Just fascinated by it.
Their accounting is a lot more complex because it's illegal federally. So that means that they have a lot of expenses that they're paying for out of their pocket that they cannot deduct. Federally.
But for local market, well,
we don't know. The state of Oklahoma hasn't commented yet on how it's going to be treated for tax purposes, but I'm assuming it probably won't be deductible for Oklahoma either.
Probably copy. All right, cool. All right, so that's charters of accounts. Let's move on to the tax return. We were going to have a class, and I got tired, and you just shut that deal down.
It'll happen one day.
We're this is our pre-class of getting together. So 1040, what does that mean? And give us I know it's a boring subject. Give us, what is that all about? How does that work?
Sometimes I categorize or call the 1040 like your summary, because that's really what it is. A 1040 is your financial summary of everything that happened that year. Like for if you have W-2 income, if you have interest income, self-employment income, all that's going to show on your 1040.
And is that what the bankers look at? They look at your 1040? And so when you say the word 1040,
that's your tax form.
That's just the total tax. Now, why, when I look at my taxes, it's like 50, 60 pages. Like, but what is the difference? Is that just ties to the 1040?
Yeah, the IRS has different schedules that are required for different types of income. So the 1040 is the summary page. We can look at
all
it that
those
way.
different incomes.
Yeah.
Okay.
But like, I don't know, if you have self-employment income, that's going to be on the IRS Schedule C.
Okay.
Or if you have capital gains, stock sales, that's a D. So all those, it's all compiled.
And then the K1 is, what is that considered?
The K1 comes from another entity like a C Corp or an S Corp.
And you document on there.
Mm-hmm.
Okay.
Yeah, so it shows up on your 1042 if you're a pass-through entity.
All right. So we were going to have this class, and what were you going to teach us in this class?
Well, for me, I really wanted to just go over, understanding your 1040, because a lot of times I meet with clients and they tell me, well, I mean, I love my accountant. They just tell me where to sign, and I don't ever have to pay tax. And
they don't understand what they're signing.
Well, okay. And so I just really, I feel like is a class that should be taught in high school.
Oh, we don't even know why the history behind taxes.
Yeah. The history behind taxes.
And why?
Because you're getting a refund doesn't mean that your accountant's awesome. It's tax that you paid in. I mean.
Yeah. Exactly. That's just the misconception of that we're automatically, like even this 8-year-old kid I was tutoring yesterday, I said, her sight word was interest. Mm-hmm. And I was like, ooh, that's my word. Mm-hmm. I go, what does interest mean? And she says, oh, I'm interested in something. I said, that's one definition of interest. I said, do you know what my favorite part of that is? She said, well, I said, interest, like you're a money sitting in a bank or your loan money, you receive interest. You receive, she's like taxes? Wow. I mean, this is an 8-year-old.
Yeah.
She associated interest with taxes.
Interesting.
It's very interesting. No one knows or understand it. So,
well, like, you know, for me personally, I always try to break even on my taxes. I don't want a refund, you know, because that means that I gave a loan to the government interest free.
Mm-hmm.
Why do that? And that's what so many people are doing with their pay stubs every week from their employers. Some people like it as that forced savings account. Like they know at the end of the year they're going to get a big refund. But why?
That's interesting. That's almost like I remember as a young real estate investor, I have to pay my own taxes and insurance.
Mm-hmm.
But like at your own personal mortgage, you had this thing called escrow.
Mm-hmm.
So it's the same thing. The government is just
exactly
escrowing.
The same thing. Now, you know, there are sometimes credits that are available that are refundable, meaning that it's not tax that you paid in. It's an actual credit that you get back. You know, but most of the time it's you just overpaid.
So, you know, what advice or encouragement that we can give someone to take interest in this? I think that we're just so blinded about taxes and we just accept it's like the norm.
Yeah, and I think maybe because it's overwhelming to people. They don't like dealing with it. It's not fun. It's not sexy.
Yeah.
But,
I know that's what we're trying to make this episode sexy.
Oh yeah. So when I work with a client, I try to explain their tax return to them, and sometimes I can see they're like not interested at all, and that's fine. That you know, but some are really like, you know, I go over it line by line. You know, this is your tax. This little portion of taxes from your self-employment income, you know.
Yeah. And why you should do it. And you know what's interesting? I was thinking when you're talking about not paying taxes or, you know, getting a return back for savings. And so I was that guy. Mm-hmm. And I'm going to confess this. I was like, I hired whatever accountant I wouldn't pay taxes for.
Right.
And this is way before you guys. And so I was like, you know, I don't want to pay taxes. I'm anti-taxes because I pay taxes when I eat food. I pay taxes on gasoline, on electricity, on the necessity in my home.
Right. The
natural gas that comes to my house, I'm being taxed on. And it's after tax. So I'm kind of getting frustrated about this situation. So for years, I didn't pay attention. And I was like, at the end of the year, the guy was like, yep. You don't pay actually, you know, Mr. VanCauwenbergh, you're getting some money back. And I was like, this guy is amazing. Mm-hmm. Until I really became educated and I realized nothing bad. The numbers were accurate, but the depreciation was wrong. Oh. And it was a big, that could be a big no-no. Meaning if I depreciated a property down wrong or set my basis points wrong, right, and I randomly sold that property because I had a bunch of equity in it, I would take a huge loss.
Right.
And so let's end with basis points. Okay. This is another thing that I've learned by working with you over the last couple of years. And I never understood as an entrepreneur, I know that I can write off expenses. And of course, when you're just starting, you want to write off as many expenses as possible. And so you may buy a $100,000 house, right, for $50,000, and then you have tons of expenses to build it or put it, and you want to do repairs, not necessarily improvements. And improvements not necessarily wrong because does that change the basis points? So, explain the basis points. Should I document that property with the IRS for $50,000? Now, of course, it says it on the HUD, on the closing statement. Or do I put the capital improvements in it, put the depreciation set at 70 with an evaluation of 100 so I can get more depreciation? Or is this just a strategic move? Should I do, because I know this now, but I did not know this for 15 years or so. Or do you understand what I'm saying? I
understand what you're saying. But, if it truly is a capital improvement.
It truly is. You accounting person.
Here I go. It's all about the wording, right?
Yeah. This is, I mean, what's a basis points? Let's start there, because I think a lot of people don't know that.
Your purchase price and your closing costs.
Purchase price and closing costs.
That's going to be your basis, your book.
So
basis.
that's what's book basis.
Uh-huh.
So, but that's not what I have in the property.
Right. But let's say that you've done some flooring repairs.
Hit central heat and air and a roof.
Okay, central heat and air and
Because
roof.
this is easy. These are
I'm
easy
gonna
class.
capitalize that.
Yes, we're gonna. Okay, so now we've capitalized it. Now it's at 80,000.
Mm-hmm.
So my basis point starts at
80,000, but we separate out by what it is. So like your house, your purchase value, we're going to do that at 27.5. You know, your HV
depreciation, guys, 27 and a half for 27 years.
Yeah. And then as your improvements, like your roof or a heat and air, we might do that. Definitely heat and air, probably over 5 to 7 years. But, and now a roof in this area, we could argue as it just being deducted.
Okay. And when you say that, that means that I can write off the paint because that was considered an expense because I had to paint it because it's a typical repair.
Right. Especially after a tenant moves out.
Right. But that gives me an advantage in my taxes because it's considered a deduction. You're
deducting it all in that year
all
when it occurred
on the front end,
as opposed to spreading it out over multiple years.
And basically this boils down to a tax strategy. Mm-hmm. Depends on where you're at. And if you're just starting out, you probably want all those deductions as possible.
Or you might need them next year too, you know.
And how do you determine when to make those decisions? Do you advise people? How did the investor...
It starts to come up around the end of the year, pretty much, you know, and then in early the following year, too. Just same thing we can do with vehicles, too. Like if we should take bonus depreciation, or you know, like 50% of it, or not. Maybe you might need it the next year when your income's higher.
Just to help you with your tax burden of what, of basically your tax burden would be. I've made this much money. I'm in this tax bracket. I got to pay this much taxes. I don't want to pay $10,000 taxes, but if I take a bonus depreciation, and what is a bonus depreciation?
That's just a rule out there that you can deduct up to 50% of a cost on certain items. And we can't do it on a rental property, but you know,
on a vehicle, equipment.
Yeah.
Okay. Well,
large tools or anything that you need to run your business. The one thing I do want to say, because I have seen this happen before, depreciation is not an option. Like not an option.
Yeah, like you can't not depreciate.
You can't not take it. Because I've seen that before where they wanted to make their tax return look better by not taking depreciation. And
and on your 1040, that's a negative item on there.
Well, it reduces your overall taxable income, which, you know, if you want to show more income on
depreciation
your tax return,
debits that.
Yeah. So, but it's not, you can't not take it. And now the only reason we wouldn't take it is if, like, let's say that you were getting that house ready for rent and it wasn't available for rent yet, then I might override that depreciation and wait until it's ready.
Okay. So I know I got 100 questions. We need to do another episode. So here's another question. I own a house for 15 years and, I refinance it. The depreciation still stays in place as long as you own the property. So when you set your basis points and you purchase that property from that day forward, it moves down the line.
Right. Mm-hmm.
And then when I sell that property, I get the tax burden on the profit.
Right. Mm-hmm.
And I have to recapture the
depreciation
for as length as, so if I sell it.
Yeah. So if you've had that house for 27.5 years, it's fully depreciated.
So
you've already taken that
all that money out.
Yeah.
And I have to either pay it back to the government as a profit, or it's considered a profit.
It's considered a profit.
So
unless you do something like a 1031
or owner finance it to somebody, or because if it doesn't change his hands, if I did a contract for deed and left the property in my name,
right, then it would just be.
Now, what if I died? I don't know if this is out of your area of expertise, but if I died and I willed it to someone, does that depreciation stay?
Well, then you get a step up in basis. So that's really what's ideal is your legacy, you know.
Right.
Then your heirs get that property at the market value. No
cool.
tax, you know.
And then that's their new basis points. So I should just die.
Oh yeah, just go ahead and die. I mean, I think that's, if you plan on holding on to properties.
Just hold on as long as possible.
Yeah.
Because the transactions that I'm looking at right now or trying to purchase are they're older, they're retiring, they don't want the tax burden.
Right.
So my first inclination is why don't you just carry it? Because you want the income. But I mean, you can, and I've been educating these people, you can put it in a trust.
Yeah.
I can pay it off. If you die, this is what happens. It goes to the heirs. Now I have to pay them. It could accelerate this. I mean, there's so many creative ways to make it happen.
The good thing about having an accountant that you can call whenever you want to,
and I do,
is you can plan for that. Sometimes people are worried about this tax burden that they're going to have on this property. Well, it might not be as bad as you think it is, depending on your other income. It might be subject to 0% tax. It just depends on what you have going on in your personal
or how
tax
much you've
bracket.
Depreciated, or how many houses.
Yeah. So if you can just call someone and say, well, I have this going on, what do you think I should do here? Just
cool.
Someone else that you could strategize with and that understands
all right
real estate. Yeah.
Well, anyway, this was awesome, and it was all chill too. It wasn't. You were right. You warned me before you came up here. Hey, this is not the bed. This we're going to talk about taxes. I don't know how long this is going to go, but I thought it was very informative. Listen, if you thought it was informative, message me and I'll get you in contact with Miss Taylor. You can Google her up. You can find her. When we get these questions answered for you at kind of no cost, but we really want these questions so we can get them out there so we can help other people. Anyway, well, we're going to bring Rose back here shortly. Thanks for tuning in to the Savvy Radio Show. Miss Taylor, you're our bomb. Thanks for coming.
Thanks for listening to the Savvy Radio Show. Glide online and listen to our other motivating episodes at savvyradioshow.com. Connect on Twitter at LandlordBook and always be buying assets.